You've heard us discuss many complex subjects and topics coming from the Informed Investor Studios in the past. We've discussed interest rates, inflation, the relationship between bond prices and interest rates as such. We've discussed coal crisis, we've discussed Evergrande, and for this episode of Informed Investor, we thought that we will do something out of the blue. We thought that we will do something which nobody would have ever imagined of. So we will not be certainly discussing the MPC's decision to not raise the repo rates and the reverse repo rates. We'll certainly not be discussing about the rising commodity prices and the inflationary pressure that it is putting on all of us, and certainly not the impact of assembly elections on the stock markets. But instead, we will discuss the role that your spouse plays when you make all the important investing decisions. It is said that every home has a finance minister, and as you can see, our home is no different. For today's episode, I have this special guest, my soulmate, my life partner, who joins me today in bringing to you whatever that we've learned, whatever that we can share with you, so that if it helps you, even that 1%, then the whole aim of doing this very special episode of Informed Investor should really mean that much more to us. Now, we feel that today's episode, when we do this as a couple, does resonate with you. Of course, for that you will have to be a married person and then be living together.
If you do intend to benefit from learning things which you should be doing as a family to create wealth for yourself, for your children, and the generations to come, then you're at the right place and at the right time. You're watching the special couples episode of Informed Investor, an initiative by Research and Ranking. Let's begin.
For ages, Indian woman has played a very pivotal role in managing the household finances, and it is said that women hold the isgharkitijuri role in every household. But what does it mean? I mean, it's very important for us to understand this metaphor when we say isgharkitijuri. But if you really look at the meaning of it, what it means is that the lady in the house is given some budget. From this budget, she's running the household. And within this budget, she's eking out some amount of that saving and keeping it for a rainy day, without the household actually knowing that such a saving is being kept for a need that might come up at a later point in time.
The only problem with this setup is that the money remains idle when it could be fetching huge returns. As a wise saying mentions, little drops of water makes the mighty ocean. If you think that big money cannot be made with small savings, think again. Let's see what even a little money can create if you're patient. See the table on your screens now. Even if you invest as little as 3,000 rupees a month in an equity fund that gives a return of 15% for a period of 25 years, you would have invested 9 lakhs. But look at the possible upside at this rate of return. With this little money, your wealth creation results in nearly 1 crore of funds.
See that little saving of 3,000 rupees a month at 15% return is actually generating for 25 years period an overall net worth of about 1 crore. Now 3,000 rupees is something that every household lady saves. Well, that's a hypothesis at my end. But what you may not agree is 25 years, 15%, that's a rate of return that any good equity advisory firm should be able to give you. In case of R&R, this is much higher. But 25 years of a time of holding an asset, keep investing every given month is a question mark that you should be having in your minds right now, right? But can I ask you a question? When was the last time you considered selling the gold that you received from your mother? And when was the last time that your mother considered selling the gold that she received from her mother? If you put it all together, the generations that have been holding this given asset, gold, has actually been more than 25 years. And we are saying that if you're able to invest just 3,000 rupees, and that is what Gita gave an example to you, 3,000 rupees, and that should create a corpus of what? 1 crore for you. But staying truthful to the topic as where we are, I'm speaking as the husband in the equation, and I'm also speaking as a male. Now, there is something which is very peculiar about this gender, the male lot. When they take the decisions, they generally have this bias, which is what we know as a confirmation bias. So there are times when the investing decisions can more be based on emotions or maybe biased. And that is where it becomes very, very important for a family to take these critical decisions together. As they say, 2 minds are always better than 1. And why do I say this? Because the ramifications of taking those informed and very insightful decisions will be felt not for just a year, but for decades, sometimes for generations. And if you keep this in mind, then it becomes very important for a family to stay together and to take these decisions on investments together.
Various studies have shown that the portfolios of women investors deliver better returns than those of men. For instance, according to a survey by ET Money, whose findings were published last year in March, women investors have generated better returns than men every year from 2017 to 2020. The reason women are able to give a better investing performance than their male counterparts could be due to their specific behavioral traits. Compared to men, women are more risk-averse, trade less frequently, research more diligently, are more disciplined, and not overconfident. So they tread with caution, remain invested for the long term without frequent trades and switches. They are disciplined about their asset allocations without any knee-jerk reactions or impulsive redemptions.
That's fair. At least the data was not known to me that it is published by ET now. But as I say, uh, women are experts in providing a very balanced diet and nutrition to the family. They do so by balancing what is to be served in the breakfast, at lunch, and of course, in dinner. And a similar parallel can be drawn for the investments that you need to make as a family. Now, when I say what is a balanced diet got to do with investment, well, the parallel that I'm trying to draw over here is that the investments need to have a proper diversified asset allocation built in. An asset allocation may not necessarily start and end with equities, direct equities alone. You may have mutual funds, you may have gold, you may have real estate, you may have bonds, you may have the NPS as such, you may have all other investment vehicles, but the asset allocation becomes very, very important. And this is where you need to diversify, you need to balance it. Now, if I was to talk of assets, there are 3 ways in which assets can be categorized or actually are categorized. Now, these are the 3 factors. Generally, there could be a 4th one, there could be a 5th one, but the 3 factors that hold true in classifying assets are: number 1, the expected returns; number 2, the risks that are involved; and number 3, the liquidity or the ease at which you can liquidate, you can sell or buy an asset, right? Now, generally speaking, risks and rewards, they go hand in hand. As they say that higher is the risk, higher is the reward. Simple as that. But if you were to compare asset classes like equities, and this is not rocket science, but equities in the short term can be very, very volatile, right? This is where you may have periods where you will get returns on the portfolio that may read dark red, right? Those are losses that you may get in a short term because the volatility component is very, very high. But in the long run, if the businesses are correct, then equities always tend to outperform all other asset classes. But the same cannot be said about bonds, right? Bonds, on the other hand, are not volatile. At least they have the risk of interests, right? But bonds are not that volatile as equities. And hence, in the short term, bonds may be stable. In the long run, they may give you a result. But that result is largely limited to a return that is very, very limited. Now, risk taking ability also depends on age, right? Both of us are very, very young, as you can see. But risk is also dependent on age. It's said that when you're young, you can take a lot of risks because the shock at which you take a decision and are able to come out of it can well be absorbed when you're very, very young. But when you talk of a person who's retiring and coming off that particular bracket or coming into that particular bracket where capital preservation tends to be the top priority, then risk taking takes a backstage.
We often take advice from the most trusted professional, whether a doctor, a lawyer, or a CA, etc. Investment planning is a very serious subject. One should not take things in their own hands. While the valued advice of an investment expert comes at a cost, it is often negligible when compared to the potential benefits and the costly investment mistakes one may make. An investment advisor would help an investor stay firm on course, tiding over short-term market ups and downs and not bowing down or giving in emotions while making investment decisions, just as the way informed investor is to you and your loved ones.
Well, I'm glad that you mentioned this at this given stage because weathering the volatilities in the short term can be very, very challenging. Geeta and I remember that we've gone through a period when we were let's say we were very naive investors, right? Who used to get influenced by the news inflow because the idiot box used to be our common friend. That's where we got most of the information from, and living through the volatilities in the short term basically meant that there were days when we were absolutely elated, over the moon. खुशी की कोई हद ही नहीं, कोई सीमा ही नहीं. But then there were days when we were truly dejected, and our shoulders were drooping, and we would rather be looking at each other without saying anything, wondering how that notional loss, what it meant to our savings, what it meant to our portfolio. These are those initial days that we are living. But can I tell you something? These are the moments when you need to remind yourself that you are in this together. And this is where investing as a family, investing as partners, I introduced Geeta as my soulmate and as my partner. These are those moments when you need to reaffirm the faith in each other's abilities and keep reminding that you are in this together.
Very true, Sanjeev. And this is where being together helps because a little reinforcement of faith and comforting your partner goes a long way. There is no way that every decision that you take will always be right. There are bound to be odd days, and you have to take the failure also in a very positive way. The important things to remember and keep reaffirming is that this too shall pass. If there are good days that you plan, then there are also not so good days that you should learn to live by as well.
That's very fair. Now, there is often a debate in families as to how the prioritization of expenses need to be done. In our family, if I can recite the debate that always keeps happening is between our lovely little angel that we have, and I'm speaking about my daughter, our daughter. The debate there is that there are things that she wants to do. Of course, those are also important in her views. But then there are debates. Then there are aspects as parents we consider that there is a savings element, and then there is an investing element that needs to be considered. So the prioritization of expenses will always remain a matter of debate, and this is where there needs to be a harmony. There needs to be a consensus. There needs to be a commonality that needs to be brought up to the table when you're considering what comes first?
First, a family needs to have a financial goal in mind, and both the husband and wife needs to be on the same page when it comes to the aspirational goals. For instance, the priorities need to be spelled out as to where to spend and where not. An example of disconnect between the spouses in terms of aspirational needs could be फॉरेन वेकेशन चले नहीं नहीं मुझे अपनी गाड़ी लेनी है. So this needs to be rationalized. One needs to rationalize between such spending versus saving for the future.
Yeah, I mean, that debate of going for a foreign vacation and buying the next SUV is always going to be there on the table. I wish this part of the discussion gets chopped off and gets edited. But yeah, I mean, those are always the debates and discussions that you'll have as a couple where priorities again will clash. That's fine. But you know what? Having a goal is very, very important. Because what it does is basically makes you disciplined. And it enforces that you think in the direction of saving first and then thinking about the expenses. If you do not have a goal, if you do not have a plan, if you do not have what you want to achieve, then unfortunately expenses will take the priority and your goals will ultimately be left orphaned. So it's very important, and please take this as a word of advice from a friend, if not a investment guru, that have a goal, because this will force you to think and bring the discipline that you need.
Like savings towards retirement needs, children's education, and marriage expenses, most people underestimate the need to save towards retirement, saying it is a distant event and that one can prepare for later. One needs to remember that retirement is inevitable, and at some point when the income stops, it is important to be financially prepared for the same. Similarly, the rising cost of education is known to all, and it is important to build a separate corpus towards one's children's needs as they grow up.
Now, here's a guru mantra for the episode today, okay? And this is where I wanted to thank Geeta as well, because as a husband, if you have a partner who is investing, they can't be anything better than this. You know why? Because as she said a while ago, that the lady in the house, the woman, always has an outcome-based approach. An outcome-based approach where goals are defined and there is a discipline and there is a longer time holding period, you may say. The patience is so much more evident, and the whole tension that you have as the sole earning member of the family is shared. And that's where, if you have your partner also taking the deep interest in investing, there can't be anything better than this. Please believe me. And as you watch this episode, if you have your wife around, please show this particular part to her, because what I'm about to say to you may well resonate with you. This is one particular part that Geeta may not like, but let me say that, okay? It's very important that the lady in your life also invests, or if you are a working lady and your husband is not investing, let me put it that way as well. So your partner, that means your spouse, your husband, should also learn the art of investing. You know why? Because there is always this Murphy's law that holds true, right? And in our case, what I can say is that there is a reality of life that we will have to accept, and so do you. That the life is never, ever meant to be immortal. There could be a day when the unfortunate news may come. There could be a day when there could be a debilitating accident that the earning member of the family may face. But then that leaves the partner thinking, what should she or what should he do in these cases? So this is where I'm saying that as partners, if you're not in sync, if you're not involved, if you're not investing, then God forbid that day comes and you will be left looking at your relatives. You will be left looking at your friends. And that's a moment when mercy takes over than intelligence should. And these are those moments, God forbid, if the earning member of the family is no more, and you're left with a child or children to take care of, then I'm afraid there are many, many, many people out there who will take you for a ride. And these are the moments when you may be defrauded and otherwise indebted to others as such. So, as a couple, please keep this in mind that it's just not about building wealth together. It's about thinking of what can happen and planning for it, right?
No matter how progressive India has gotten as a country, men are still the bread earners and women are considered the nurturers. Hence, in terms of financial literacy, females are yet to make their mark. Essentially, this is one reason why women are more likely to shy away from taking the reins of handling finances. To conclude, all we need to drive is the fact that you, as the lady of the house, are an important member in the family. You should not stay happy confined to the television soaps, kitty parties, and rearing up the children. You are equally need to participate in the financial investments and take decisions on your own. This way, you will build your own self esteem and confidence, and also your family will admire your contribution.
So we do hope that this abridged version of Informed Investor, I was just mentioning this to my team here. This is the first time that you would have seen an Informed Investor under 30 minutes, but that's a magic Geeta has on me. That's where we say that brevity is the soul of wit. She's able to get that much more out of me in that limited time. But listen, the entire episode today is meant to share with you the candid and the very, very transparent views of what we think as a couple. And you may not necessarily subscribe or agree with what we're saying. And there are moments of this given deliberation that we've discussed today that may appeal to you in some way or the other. As you saw that there is no data overload, there is no reverse repo rates and repo rates that we discussed today as a couple, but it's just an honest admission from both of us about what you can potentially look at when you invest, but as life partners.
Here's wishing you and your loved ones the best of health and wealth ahead.
Till we meet again, this is Sanjeev and Geeta, or rather, let me put it this way, that the lady always comes first. Till we meet again, this is Geeta and Sanjeev Anand, signing off from the Informed Investor Studios. Take care, stay healthy. Bye-bye.